Inflation just did something that no one expected, and it could completely flip the mortgage market back on its head. So today's inflation came flat at 3.8%, and that's the third month in a row. Now that might sound boring, but economists were actually betting it would rise again, with some expecting a peak of near 4%. So why does this all matter? Because when inflation doesn't rise, it takes the pressure off the Bank of England, and suddenly rate cuts could come sooner than anyone thought. But here's where it gets interesting. Swap rates, which heavily influence mortgage pricing, dropped straight after the news was released. And that often is the first domino before lenders start to adjust their rates. And remember, banks still have targets to hit, the housing market is limping along, and if swap rates settle down at these levels, we could easily see lenders competing harder for borrowers again. And that's exactly how the last mini price war kicked off earlier this year. But let's not get too ahead of ourselves. Data can flip fast, and with Labour's autumn statement coming next month, a single policy change could blow this whole idea out of the water. For now though, the mortgage market watches closely, because one lender blinks, the rest usually follow.